So that is the focus of the morning trade, Nvidia. So joining us for a closer look at this name is Schwab Network's host, Marley Kayden. Very good morning to you, Marley. So what do we know about this as far as what we got yesterday? Because you and I were talking about the reporting, and then we got some more confirmation overnight as well.
Yes, we did get more confirmation. The president announced that Nvidia will now be allowed to export those H200 AI chips, while Washington will take a 25% fee on the sales. That is up from a previously announced 15% rate that was agreed to in the summer. So this is a modest departure from some of the export restrictions that the U.S. had placed on sending any of these cutting AI processors to China. Previously, the most advanced semiconductor that Nvidia was able to ship to the country was the H20 model, which Nvidia had specifically created this less powerful chip to comply with U.S. rules, but those had to be halted back in April. The H200 stands to be around 6 times more powerful than the H20. But it's not yet clear if this new policy will actually boost sales for Nvidia. Nvidia had previously reported that these export control impacts were roughly $4.6 billion in the fiscal first quarter and about $4 billion in the fiscal second quarter, because China historically represents about 20 to 25% of its data center revenue. Now, with this approval, this does not include its advanced Blackwell or Rubin chips. Those are not a part of the deal. We are starting to hear from some analysts, though. We got a note from Wells Fargo. They said they call it what they're saying, quote, an incremental positive. They think investors could see a $25 to $30 billion annual plus revenue, perhaps adding 60 to 70 cents a share EPS impact. They maintain their overweight rating. They still have their price target of $265, which is considerably higher than the $184 that they're trading at right now. Wells Fargo did flag several open questions, though. They flagged the incremental capacity allocation, what the approval process looks like for a Chinese customer to get their hands on an H200 chip, and whether Nvidia can repurpose these written down H20 chips and that inventory they have to then be repurposed for the H200, as well as the 25% of revenue paid to the U.S. government. They're wondering how that's going to be controlled. Wells Fargo also had an interesting note that they felt that AMD and Intel could also both benefit here. AMD does already have a license for its MI308X chip, but the ban had cut their revenue guidance by about $700 million for Q2, about $1.5 billion for the year. Wells Fargo thinks that AMD is going to get licenses for its higher performance chips now, and Intel could also benefit. William Blair also putting out a note saying that they think that these chips will likely, what they say, drive upside to current expectations for Nvidia's fiscal 2027 revenue. But I do want to note that William Blair did not change any of their forward-looking estimates, as they are, quote, seeking more evidence that China is putting in orders for the chips before coming more constructive on the stock. So, I think they're viewing it as a positive, but I also think that the analyst community is looking for evidence that these chips are actually going to be purchased. There will be customers for them. The restrictions on approving those customers aren't going to be too stringent. Some unanswered questions still here, Sam.
And then the big question is whether actually Beijing will allow it, because obviously there's been some reporting around that. But as we know, what Beijing wants, the Chinese government wants, isn't always what Chinese companies want. And we've seen that by the way of some of the smuggling rings that have also been cracked down on too, to try to get those Nvidia chips through the back doors. So, fascinating story. We'll continue to watch it. Thank you so much for that, Marley. I'll talk to you a bit later. Let's trade it now with Tim Biggam, option strategist at Pilot AI. How are you approaching your example trade for Nvidia this morning, Tim?
Good morning, Sam. And yeah, looking at it kind of in a similar vein as you and Marley were talking about, and the analysts were talking about, incremental, or what I term slight positive, certainly for Nvidia. I don't think it'll send the stock ripping to the upside. We're seeing it down today for that very reason, probably. But I think those kind of 175 lows we saw in late November and previously a couple times before that, major support down around there. So I'm kind of hanging my hat at that level. I would not be an aggressive buyer of the stock here, but on further weakness may get interested. So going out to next week's options, selling the 175 puts, hedging with the 172 puts. Want to keep it tighter than normal on the spread width, collecting somewhere around 50 cents, give or take, kind of like that just under 20% return on risk on the trade. Have about, 10 points or so downside from the current price of Nvidia for the stock to drop before the trade gets in trouble, and only have 10 days to go Broadcom earnings, as you alluded to, might be the last big earnings report we see out there. Might affect Nvidia a little bit, but I think going forward, kind of stuck in this trading range, not only Nvidia, but the market overall, between the all-time highs and the recent lows that we saw. And I think it will kind of continue into year-end, barring any kind of calamity coming out of the Fed meeting tomorrow, which I don't envision at all.
Yeah, 170, certainly the area of support there. That's when we saw certainly buyers stepping into this trade. But I mean, just one chip going to China, I suppose, is a bonus for this company because, you know, its report looked good. Its earnings held up. That is ex-China. So, I mean, surely this is just being seen as a positive here. But just quick thought on the market today as we head into this FOMC decision come tomorrow.
I think, you know, the 25 bip rate cut by the Fed absolutely baked into the market here. Certainly, Fed Watch pointing towards a 90% or so likelihood of that, and probably 2 more rate cuts next year. So I think the market has kind of gotten what it's wanted out of both the Fed and earnings, which were good, not great here. So I think we're going to be probably in a trading range until further notice on the market. I think it's a good time to use option strategies, kind of like the put spread we just talked about, or selling some covered calls up above, position to be a seller on rallies, a buyer on dips until further notice. Kind of a trader's range market for the next several months.
Awesome stuff, Tim. Thank you so much for getting us across that, an example trade for us for NVIDIA and your thoughts on the market. Tim Biggam there, options strategist at Pilot AI.